I think that Bitcoin is going to have a very big year. I think that, it could easily double from here this year with all the tailwinds that I've been talking about. It's been consolidating for a while in this $90,000 to $100,000 level. And that's important. It's healthy. It's good. That means that you get all those sellers that were kind of waiting for that $100,000 level, get them out of the way. And then you're going to have a pocket there where it jumps to the next level mentally. $100,000 is a huge mental level. And it's tried to break through it a number of times now. But once it breaks through and stays through, breaks that 120 level, and then it comes back to 105, and that seems like a deal again, then that's where you really see it take off, Alan. I believe that, I've been saying $180,000 in the fall of 2025 for a while now. And
Bitcoin is on the verge of surpassing $100,000. And James Lavish warns this milestone is the last barrier before an explosive breakout. If you thought the bull run was slowing down, think again, this is just the beginning of an unstoppable surge. In a high-energy interview with Bitcoin magazine, Lavish made a bold prediction. Bitcoin isn't just rising, it's about to skyrocket. He believes that once it crosses the $100,000 psychological threshold, a powerful chain reaction will push it to historic highs. Institutional investors are flooding in, retail FOMO is intensifying, and liquidity is primed for a massive rally. For weeks, Bitcoin has been consolidating between $90,000 and $100,000, waiting for its next big move. Lavish sees this phase as the calm before a financial storm. He is doubling down on his $180,000 target by fall 2025, insisting that once the $100,000 resistance is broken, selling pressure will vanish, igniting the true bull market. Every key indicator is flashing green. The world is about to witness one of the biggest financial shifts in history. Watch clips from the interview for more insights from James Lavish's conversation with Bitcoin magazine. Don't forget to like this video, subscribe, and turn on notifications for more updates.
So we still have this $36.5 trillion of debt we've got to deal with. And how are you going to deal with that? Well, this is where the Bitcoin Reserve Act comes in. So Senator Lummis from Wyoming, her idea is, look, why don't we buy 1 million Bitcoin over 5 years? And over time, if you look at the performance of Bitcoin and how it is retaining its value against the debasement of all other currencies, then that reserve will enable us to pay down a very large portion of the debt in the future, or back treasuries with it, which will stabilize the treasury, and that ends up stabilizing the U.S. dollar, right? Because the biggest issue that we have right now, which has been growing over the last number of years, is that we're seeing sovereigns reluctant to own treasuries, to hold treasuries. Now, everybody around the world needs dollars, right? We're on the U.S. dollar is it's the reserve currency of the world. The U.S. Treasury is the reserve asset of the world. But we made some, key mistakes in this last administration, like cutting off Russia from SWIFT and seizing their assets, including treasuries. This just signaled the world that, well, you don't want to be holding treasuries unless you're a very, very good ally of the U.S. Because they could just seize them from you. So we got to find something else to buy. So they've been buying gold. That you've seen that. A lot of them have been buying gold. And they've been buying Bitcoin. And so they know that it will hold its value over a long period of time against the dollar. So the previous thinking was, if you hold treasuries, you'll make an interest rate that'll give you at least a neutral return, if not a positive real return on that debasement, meaning the inflation is going up. You need to make more interest on your bonds to keep up with that inflation. But do we want to hold those now if they can be seized from us? That's an issue for all the BRICS countries. And so that's why you're hearing them talk about, they're not trying to, create a new currency for them. They just want to be able to get away from the treasury. That's the issue. They know that they're still going to need dollars. So that's the whole point. the Bitcoin and the strategic reserve then starts this game theory where all of these sovereigns have to consider, what if the US owns 5% of the Bitcoin total Bitcoin float and we own none? That's a problem. So now you're seeing countries step in and start putting Bitcoin on their balance sheets because of this, because they know that this could be a big problem if we don't own Bitcoin ourselves. There are two paths, like you just said. Cynthia Lummis, she has the Bitcoin Act, and that would be the Bitcoin strategic reserve that we talked about, the million Bitcoin over 5 years, 200,000 Bitcoin a year. That would be the first. That's one that we've heard of. Also, we've heard since Trump was elected, people rumbling or talking about possibly an executive order. So what would that look like? Well, through the Gold Reserve Act of 1934, it's possible that he could use the Exchange Stabilization Fund in order to buy Bitcoin. Now, there's some differences here, though. So he did it through executive order. That executive order could be overturned by the next administration pretty quickly, I would think. So that's one thing. So it's not really as powerful, but it's quicker. You could do it overnight and start accumulating Bitcoin immediately, And so what does that look like? Well, there's $200 billion in that fund. But that's not all available for Bitcoin. There might be 40, 50 or 60 billion available, maybe as much as half of it. But you're talking about, it's still a lot of Bitcoin, $40 billion. And let's say that they pass it and Bitcoin runs. I mean, it's not going to be at 120,000, that would mean that we're probably only buying 250,000 Bitcoin instead of 1 million. But we would be buying it quickly. Maybe half a million Bitcoin, but likely not. If he announces that order, that Bitcoin's going to, it's going to run pretty quickly because of what you just said. Everybody and their, sister and brother are going to be out there buying it, not just other nations. And so you'll see a supply shock. The big thing is not so many people out there buying. It would be a lot. It would be the other half of it is people be reluctant to sell. Like, I'm not. If the government's gonna be out there buying, I'm not going to sell mine. So there would just be this liquidity issue. It would be a squeeze, and so that's one path. I think it's pretty low likelihood because you'd have to. There's some reasons for that. If he did that, he would be signaling to the world that he's worried about the U.S. dollar, exchange stabilization. Like, we have to stabilize our currency, that's a bad signal to the world. And that might send the wrong signal on the US dollar. So that would be worrisome. And I think he's probably reluctant to do that, even if it is something he could do. Because, he doesn't want to be, Trump really cares about his legacy, about how he's seen. He wants the market to be at all-time highs.
As global currencies continue to lose value, Bitcoin has proven its resilience, standing strong against inflation and economic uncertainty. This has sparked discussions about Bitcoin as a modern reserve asset, much like gold. Historical examples, such as the Gold Reserve Act of 1934, show how financial systems adapt in times of crisis. Many believe Bitcoin could be the next strategic move. Some propose an even more aggressive approach using an executive order to accumulate Bitcoin through the Exchange Stabilization Fund, which holds between $40 minus $60 billion. If implemented, this could revolutionize global finance and position the US as a leader in Bitcoin adoption. As governments and institutions increasingly focus on Bitcoin, the key question remains: is this the beginning of a financial revolution or an unprecedented gamble with the US economy? Let's dive back into the interview for more insights from James Lavish.
The Bitcoin Opportunity Fund is an investment vehicle. It's like a hedge fund that invests in the Bitcoin space, and we focus on later stage companies. We can invest in both public and private companies, and we've done both. And we focus on companies that are revenue generating, so it's kind of like we're looking for real companies with real returns, real companies with real revenue that produce real returns. And so we will do some early stage stuff, but it's a smaller portion of the portfolio. And so that's our focus. And the co-managing partner, David Foley, and I are the ones who are running it day to day. And, when we launched this fund, Alan, it was at the depths of negative sentiment in this space. We just had FTX and Sam Bankman-Fried and Celsius all collapse and fraud. And it was just, and Bitcoin had collapsed all the way down to under 20,000. And we were out there trying to raise this fund and explain to people it's a tremendous opportunity. Meanwhile, while we're doing that, we had the last administration who was so antagonistic on the space, refused to give clear legislation or clear regulation on it, and was attacking the space through something called Choke Point 2.0. We even had investors trying to wire us money, and the wires were canceled, or they were returned, they were refused, they were debanked. It was pretty ugly. It was a pretty ugly moment. But we did end up cobbling together enough money, enough investors to say this is worth it for everybody. Let's go forward. Let's do this. And so since that time, we've doubled the assets. We've returned over 80% net to them in just over a year, and we're really pleased. And so now you flash forward to today. Bitcoin's hovering around 100,000. It's peaked over it before, and the conversations are completely different. It's completely different. So before, we couldn't really get any institutions or any family offices to really consider it. Now we've got family offices coming to us and saying, hey, we want to enter this space. We know we need to own Bitcoin. We own a little bit of that, or we're going to buy a little bit of that, or we've owned it, but we want more exposure into this space. And you guys invest like we do traditionally. We understand you guys have been in this space. You and David have been doing this for almost 30 years each. And you are looking at the space kind of like we do, and looking to get us a better risk-adjusted return than just investing in Bitcoin alone. And that's the whole point. And so the conversations have been completely different and super encouraging. And so because of that, because we've had so many people come to us, we've decided to launch a second fund, and it'll invest just like the first fund, and they'll invest pro rata, pari passu on everything. And so according to the assets, and we've just launched it, and we're starting to take investors now. But like I said, we're focused on getting real returns for our investors. And so if you liquidate our portfolio, you get what's in your statement. We don't mark our privates up. That's a big difference between us and the VCs. We don't have any reason to mark our privates up right now, so we're leaving them at cost. And so but that's a little bit of a distinction. What we see is a ton of opportunity in the space. We're super excited about how many opportunities we have, and exactly what you just said. We see institutions coming in and wanting to hold Bitcoin, but they're wanting to hold MicroStrategy. They're looking for ways to augment their returns. And they know now, looking back on the returns of the past, decade, if you added Bitcoin to your portfolio of other investments, it would raise your Sharpe ratio undoubtedly, and which means it would raise your risk-adjusted return to your overall portfolio. Your returns would be higher, and your volatility would go up a lower amount, meaning that your risk-adjusted return would be better. So even if your volatility goes up a little bit, which is not really that much, if you have a reasonable percentage allocation to it, then your risk-adjusted returns are better, and that's a really big focal point for institutions. And now we're seeing institutions come into the space. If you look at IBIT, or if you look at the ETFs, not just IBIT, but Fidelity and Bitwise and the other ones, you've got these massive, massive institutions coming in that you're seeing. Some of the largest holders of these ETFs are like Citadel, D.E. Shaw, Schoenfeld, Tudor. You've got State of Wisconsin's one of the largest one. Morgan Stanley's a very large one. You're seeing banks come in and holding them. You're seeing banks come in and buy MicroStrategy. You're seeing massive funds that people don't even know of. Like one of the largest holders of all the ETFs is a firm. It's a hedge fund called HBK. Harlan Cornevest is an old firm. He's no longer there. It's now being run by the managing partners, Jamil Akhtar. Is a colleague of mine from the Dallas Fort Worth days. But they're a massive holder. Nobody would know who they are, but they have over $20 billion of assets, and they're buying Bitcoin because they know that it will be a strong diversification in their portfolio.
The Bitcoin Opportunity Fund is defying expectations and thriving in market chaos. Launched during the collapse of Celsius and FTX, regulatory crackdowns, and widespread uncertainty, this fund not only survived, but doubled its assets, delivering an impressive 80% return in under a year. For years, Bitcoin was dismissed as a speculative bubble, but now Wall Street is taking notice. Major hedge funds, private offices, and institutional giants are moving in, proving what Michael Saylor has been advocating. Bitcoin is not an experiment, it's a revolution. The game changed with the rise of Bitcoin ETFs, drawing in financial powerhouses like Morgan Stanley, Delaware Shaw, and Citadel. These firms aren't here for short-term gains, they're positioning themselves for a long-term Bitcoin takeover. The real question is, what happens when trillions in institutional capital begin pouring in? Meanwhile, chaos is shaking the crypto space. The largest crypto heist in history just occurred. $1.4 billion in Ethereum was stolen from Bybit, more than double the infamous Ronin network hack. Ethereum's price dipped 4%, but Bybit's founder, Ben Zhou, assured investors that reserves remain strong. With $20 billion in reserves, Bybit may be able to withstand the hit, but this raises a bigger issue: how secure is the crypto market? Bitcoin stands at a crossroads. Will it dominate institutional finance, or is this the next major bubble before an even bigger explosion? One thing is certain: the next few months will be historic. Buckle up, because this ride is just getting started. Thanks for watching. Drop your thoughts in the comments, subscribe, share this video, and don't forget to hit the like button. See you in the next one.